India's largest private shipping company just posted its highest profit ever, that too during a war. How is that possible? And the stock up by 12% in one day. Is this just a geopolitical pop or the straight start of something bigger? Let's find out. Great Eastern Shipping Company, India's largest private shipping company, been in the business since 1948. They basically own ships and charge money to move cargo across oceans, crude oil from the Middle East to India, coal and grain across continents, LPG for cooking gas. Their subsidiary Great Ship India runs offshore rigs for oil corporations. 39 ships in the water right now, and every single one is earning. There's nearly 100% realization. Three recent triggers in the quarter four results. We can see that the net profit is at 1044 crore for the quarter four, and the financial year 26 net profit is at 2943 crore. Both are at its all-time high, and the operating margin is around 62.3%. Dividend declared is 11.7 per share, highest quarterly dividend declared. So we can see that fundamentally the company is doing strong. The second trigger is the rate spike due to the war, current war, and 100% utilization. The Middle East war conflict chokes crude flows. Around 10 million barrels per day were cut off. We have fewer ships loading, longer detours, and rate spike. However, for G ship, it meant 100% utilization, so they were able to generate high revenue. The third trigger is their goal of expanding their fleet. They are contracted to buy a new Karmasax dry bulk carrier and a new MR tanker, and both were funded 100% from internal cash, and simultaneously they sold two older tanks, Jag Prakash and Jag Punky. Fleet modernization is happening in real time. What will drive the growth of this company from here is the ton mile growth. Trade retouring adds voyage days structurally. Secondly, it is a low global tanker order book, new supply constraint through financial year 2027, and rates stay supported. Third would be the every new vessel that joins at near 100% utilization, immediate earning acceleration, and fourth is the offshore recovery. Great Ship India capex cycle is picking up. However, there is certain risk involved. If the Strait of Hormuz reopens, rates normalize fast. So I advise you to do your own research when it comes to the fundamentals. And you look at the technical analysis, you look at the monthly chart. The long base of 2013 to 2021 was around 200 to 500. Then it came at its all-time high in mid 2024 at 1542. From then there was a correction. They did not test the level of 1000, but in December 2024 it broke that level. The stock sliced to 820, 830, and then on we see currently there is a recovery. We see a series of green candles. We look at the weekly chart. After the all-time high of 1542 in mid 2024 and touching the floor of 820, 830 by December, the current week opening is actually at 1544 and the highest is around 1707. So it is in the recovery phase. We look at the daily chart. September October 2025 lows around 960 to 1000. The staircase recovery since then. The support sits at around 1534. That is today's candle low, and the next support is 1300 to 1350. This consolidation is clearly visible in the weekly chart, and in the daily chart we can see the next support would be around 1100 to 1200. The January-April 2026 consolidation phase. Resistance cannot be correctly identified basically because it is currently trading at its all-time high, but I would keep the resistance at around 1800 to 900 or the current all-time high levels of 1720. So this would be my setup for technical analysis, and you look at the daily RSI, it is at 55.85. It is not overbought, so there is a great room for more momentum. By setting up my GTT trade based on this logic, I will be entering the trade at 1534. And I will be setting up my OCO for stop loss and target price. I'm entering at 1534 because I'm waiting for a pullback to the current low, the current day, and the stop loss would be around 1380. below the breakout base and well below the January-April 2026 consolidation. So 1380 would be my stop loss, and my target price would be around 1850. So my risk reward ratio is at 1:2. That is ideal for swing trade. So I have set up my GTT with risk reward ratio of 1:2. The plan will execute itself and there are no active emotions involved. However, I have one question for all of you. Do you think there is room for more momentum based on the future growth outlook and the current financials? Please do your own research and trade safely. Thank you.